Welcome to Yes Securities, where we don't just secure investments, we secure your future. In the ever changing landscape of finance, one thing remains constant: the need for a reliable partner. At Yes Securities, we are not just wealth managers. We are welcome to Yes Securities, our experience where we don't just secure investments, we secure your future. In the ever changing landscape of finance, one thing remains constant: the need for a reliable partner.
Hello, everyone, and good evening. Welcome to Yes Fin Pulse, our new webinar series, which is focused on technical and broader aspects of finance. At Yes Securities, our mission is to make finance empowering and accessible to all, regardless of background or experience. Over the past decade, we have transformed from a transactional broker to a trusted advisor for both retail and institutional clients. Reflecting on our last session earlier this month, we explored the basics of trend following with moving averages. We discussed advanced techniques and highlighted key concepts such as trend duration, pullbacks, and corrections, offering practical tools for informed trading decisions. I hope you found that session as insightful as I did. Building on that foundation, today's webinar will take those concepts even further, simplifying the methods and making them easy to apply in your daily trading strategy. Now, can you achieve these trend insights and more under an hour? The answer from us is a yes with our esteemed speaker for the day. Let's welcome Mr. Nitin Bagde, who brings a wealth of experience to the table. He boasts of 25 years in technical analysis across commodities, equities, and derivatives. His expertise in both predictive and reactionary analysis makes him the perfect guide for this session. Today, he'll be discussing the next part or more advanced version of trends following with moving averages, making it easy for you. And guess what? If you miss any of our sessions or want to revisit those, don't worry. We'll be uploading the entire session to YouTube under playlist named Yes Fin Parts so you can catch up at your convenience. We also want to hear from you. After Nitin's presentation, ask questions and share your thoughts in the comment section. Your engagement will make this session and series remarkable. Over to you, Mr. Nitin.
Thank you very much. In last session, we have covered almost the basics of the trend as well as few examples that how to catch the trend. But there is a small difficulty with that method. Uh, in the market, there are more than 2,000 stocks, liquid stocks, and finding opportunity among them makes one cannot visit each and every stock chart and then find out the trend. So the objective of this session is to make it easy uh, to find out the stocks as well as the opportunities. So objective of this session is how to discover the trend change, say from down to up or up to down at the earliest. Because if trend change is not discovered earliest, we lose we lose the opportunity or the entry becomes quite costly. So the main aim is to make the entry cheap. So the first objective is earliest discovery of trend change among the universe. The universe may be of 5, 50, 10, 20 number of stocks. Among that, uh, which stocks are changing the trend. Second objective is which time frame chart to use for longer term, medium term, and shorter term trading. Many people are more oriented towards longer term trading, that is buying delivery and holding for say more than 6 months or 1 year. The others might be interested in medium term trading, that is holding buying and holding the stock for more than 3 months to 6 months, whereas some may be interested in shorter term trading. Shorter term generally means from 10-15 days to anything around 3 months, between 10-15 days to 3 months. So different people have liking for different type of trading, longer term, medium term, shorter term. So which time frame one should use? Because as one can understand that by using monthly chart, one cannot find a short term trade, or by using 15-minute chart, one cannot find a long term trade. So there must be synchronization between the trade time frame as well as chart time frame. The third objective is which instrument to use when. Equity buying and holding, there will be retracements, there will be few pullbacks, but if one buys equity and holds, small pullbacks may not worry the investor or trader. Whereas MTF, where one only pays 50% and 50% is financed, the larger pullbacks can make a difference. Uh, it can uh, it can create problems also. Whereas in futures, a small pullback also can make a problem. Here, because futures, one has to pay mark to market. So it is a leverage position, huge quantity, and if pullbacks are there, large pullbacks are there, then future trading can be difficult. So at what stage one should use which instrument, that also I'll be telling. For this, one must know the different stages of trend or phases of trend. Now, as we know, and from last two sessions, that if a stock price is making higher high and higher lows, then it is an uptrend. So between this rectangle, it is uptrend. Next to this rectangle, the price is making lower highs and lower low. So it is a downtrend. This is this you must be knowing. But there are stages. There are stages inside this uptrend or downtrend. What are those stages? Let me tell you first that prices are always moved by institutions. Individual or a retail cannot move price. Prices are always moved by institutions. Institutions generally rely on fundamental analysis. So the user of fundamental analysis will be the first buyer, and they will start cornering the stock. For example, from left on this screen, suppose a stock is falling. It is making lower highs and lower lows. It is in downtrend. At some point of time, the institutions may find a value in it. And because they see a value in it, they'll start buying. Now the institution do not buy in one day. They buy over a period of time because their quantities are so huge that they cannot buy in one day. So they may be buying one day in a week or 2 day in a week, and over a period of time, say for a 2 3 weeks or a month or 2 months, they keep on buying. So this phase is known as accumulation because the institutions are cornering the stock. They are collecting the stocks. During this accumulation phase, generally the pullbacks will be very big. It will be than 61.8% retracements because general behavior of institution is like they try to buy at bottom. So they'll buy, price will go up, they'll stop buying, price will again fall, again they'll start buying, price will go up, again they'll stop. This way they built their average price and they try to be near to the bottom. So here the pullbacks will be very large. Naturally, trading with MTF or futures in this phase will be a difficult scenario. The pullbacks may create margin calls and big margins calls. Therefore, one should avoid trading with futures or MTF during this phase. But this is a very good place to accumulate equity in cash. So one can start buying here in a small quantity over a period of time, not in one go. The buying should be scattered. Once accumulation period is over, that is known when a previous high is taken out. This high, I hope my cursor is visible. When this high is taken out, it is a confirmation that accumulation has been completed and now trending has started. Trending, inside trending, there will be pullbacks, but those will be smaller in comparison to the pullbacks which were taking place during accumulation phase. Pullbacks will be there, but those pullbacks will be very small. Here one can buy with MTF. Since pullbacks will be low, there may not be large margin calls, and one can easily hold the MTF position. But still, futures position should not be considered here, since pullbacks will be there, and those pullbacks can continue for weeks together. So mark to market, uh, the broker will be calling for mark to market funds. Once this trending phase is completed, then acceleration start. In acceleration, the pullbacks are very minimum. On monthly chart, probably those will not show up also. So this acceleration phase is the perfect phase to buy futures. I do not mean that during trending and acceleration phase one cannot buy equity. Equity can be bought anytime. But for particular futures or for MTF, these particular phases will be suitable. The main objective of trend analysis is the discovery of trend change. Discovery of trend change generally happens during accumulation. And since we are using moving averages, we will be taking help of moving averages to discover the earliest point of time when the trend changes. Now, these phases of trend, I have to on few stocks. Like this is example one. It is Awas Financial. You can see that if my cursor is visible, that price fell, then it moved up, moved down. The retracement was quite big, more than 61.8%. This was the accumulation phase. Then started trending phase. Trending phase, one can see that pullback was very small. Pullback, small pullback. Here, if one was able to enter with MTF at the end of accumulation period, then the pullbacks were very small, and MTF margin call would not be that difficult. Once this trending period is over, then acceleration starts. This is a monthly chart, and one can see that there is no pullback during this acceleration. Each bar is making higher high and higher low. Here buying futures will be very much suitable. Once this acceleration is over, then slowdown starts. During slowdown, the new highs will be made, but the retracements will be large. Here, the divergence will start occurring. Once this slowdown period is over, then distribution starts. So the previous breach of low happens and distribution starts. Once distribution, now downtrend has started. This trending phase is of downtrend. The acceleration is of downtrend. This slowdown is inside downtrend. Here the trending phase was inside uptrend. Acceleration was inside uptrend. This is example. This is a very simple example. I'll take one more complex example. There is Reliance, chart of Reliance. Around 2009, the accumulation started. The main problem during accumulation is that how much time accumulation is going to take. No one can, uh, there is no answer to it. It can take months, it can take years. In previous example, it took only 2 to 3 months. Here it took almost 7 years. The another example is Hindustan Lever. There also accumulation took almost 7 8 years. So therefore, during accumulation, since the time it will consume is cannot be forecasted, therefore buying MTF and futures is not suitable. Once accumulation completed in Reliance, you can see the trending phase starts. There are small pullbacks, very small pullbacks. And in acceleration, there is no pullback. The price moves straight in line. Currently, I believe slowdown period is continuing. Now, how the earliest discovery of trend can be done with the help of moving averages. So this is the green one is 12 EMA, 12 bars exponential moving average, 26 bars exponential moving average is the orange one. The theory behind this is that when the time frame, smaller moving average is above higher period moving average, then the trend is up, and during crossover, the trend changes. So at the end of December 2022, this red line is there where the crossover happened. And this crossover proved that the trend has changed. But with this method, you can observe that the top took almost in January 2022, and trend change the confirmation of trend change happened at the end of 2022. There was a lag of time. The prices started falling from 2022 initial period, whereas the confirmation of trend change came in last month of 2022. So there is a huge lag. This lag can be reduced by another tool using moving average, and that is MACD. MACD is nothing but a moving average crossover and divergence. So generally every charting software includes this tool. The standard figures are 26, 12, and 9. 26 is a larger moving average, 12 is a shorter moving average, and the difference of these two moving average, again there is another 9 moving average that we put on the difference line. So the red line is a difference of 26 and 12, and this is 9 moving average. This line is 9 moving average on it. Here we are able to reduce the lag by almost 8 9 months. The crossover on MACD informed us about the trend change, whereas the only using moving averages on price was this red line, whereas by using MACD, this is the purple line. The purple line is telling us that at this particular period, point of time, the trend has changed. Now, sorry. Now here I am using monthly chart, and I'll suggest everybody to use monthly chart while using these tools. The reason behind that is MACD is a very sensitive tool. It reacts fast to the price change. So if someone uses it on daily, then the MACD will look like something like ECG chart. ECG is a particular test done on heart rates. Uh, so to draw draw any inference from that, it will be very difficult. The idea is that one should trade in the side of larger trend. The larger trend is from monthly, and then if larger trend is up or down, then one should trade in that direction on shorter time frame chart. So for these tools, I'll suggest to use monthly chart only. This how we were able to reduce the lag between trend change used by two different methods. We are using same tools, the moving average or same time frame, but by changing it a bit, we are able to reduce the lag. Now, Awas Financier is in downtrend. Again, there is a probability that it may change, the crossover may happen, and if crossover happens, then from here the uptrend should start. But naturally, there will be accumulation, then trending, and then somewhere after that, acceleration period will start. So, as I told you, the equity should be bought on during accumulation period. So accumulation period is indicated by crossover of MACD. So every time on monthly chart, when crossover happens, it is a time to buy equity. Now here few points uh, one must pay attention to is that generally the crossover, when it happens below zero, the signal will be best. So like the crossover here, it happened above zero line. Here it has happened above zero line. These crossovers one should not act upon. The crossovers that take place below zero line should be acted upon. Here we have given a small error margin, zero line plus 10 and minus 10. Suppose we are buying, then whenever the crossover happens below 10, then one should act upon it. Like like here, it happened below 10, not below 0, but below 10. So one should act upon it. But here it has happened above 10, so it should be ignored. Here it should be ignored. Here it should be acted. Here the price, it is a false signal, so there may be few small false signals, and therefore the risk management has to be done. uh, Sorry, in first session I have told that trend does not perform every time, it will perform most of the time. Again here the crossover has happened below zero, and see the rise it has given. Thereafter, the divergences are also visible on MACD. You see here this high. This high is higher than the previous one on price chart, but here the high is lower high. So this is a divergence. This indicates that momentum is reducing, and once momentum starts reducing, it increases the probability of a correction or a fall. Here again, below 10, the crossover has taken place, and now it is still rising. So longer term trades, say for 6 months to 12 months, can be done on this methodology, but only with equity. No MTF, no futures. For MTF, we should shift to weekly charts. And the condition here, we will be adding one more tool, that is RS. RS is relative strength. How this particular, this is Apollo Tires, how this Apollo Tyres is performing against the Nifty 50 or Nifty 500. I have taken here Nifty 500. So this is the 25 line, this is the minus 25, sorry, this is 20 line, this is minus 20 line. If the returns are between 20 and minus 25, then it will be gray. If the returns are below 25%, then in comparison to Nifty. For example, suppose over a period of time in 10 months, Nifty has given 20% return, for example, and a stock has given 35% return. So overperformance is there by 15%. So those are the figures here. Those figures are plotted here. If this is 25, this might be 25, means at this particular point of time, the stock was overperforming Nifty by 25%. So if one wants to leverage with MTF, then the conditions are there, are such. The moving average MACD should be positive. Positive means the dashed line should be below the main line. The dashed line should be below the main line. This is condition number 1. And then we shift to weekly chart. On weekly chart, the condition the condition is the condition is that the price should be above 200 period moving average. Also, the price should be 34 moving average, and the 200 EMA should be greater than 200 SMA. These three conditions when met, one can take an entry. For example, probably 2020 November, the crossover on MACD happened. So from here, one could have bought delivery. After that, if MTF is to be applied, then one has to wait for a condition that moving average 34 should be greater than 200 and 200 EMA should be greater than 200 SMA. So, sorry. One more thing, we are conducting a poll also side by side. So, it will help us to understand how to it will help us in understanding the needs of the attendees, and it is my request that you should go and reply to the polls. So I was talking about MTF. Now, when in late 2020, when the crossover in MACD happened, it was a time to buy delivery. From that point of time, this is late 2020, the first green line. From here, we see that 34 moving average is below 200 moving average. So this is here one cannot buy MTF. Now at this point of time, the 34 EMA has become higher than 200 EMA, but the green one is the 200 EMA, and the saffron one is the 200 SMA. So here 200 EMA is lower than 200 SMA. We need it to be higher than 200 SMA. So all these three conditions are met here. And if one has taken a position here in MTF, you can see the rise thereafter. There are very small pullbacks, but the trend is continuously making higher high and higher lows. So this is a perfect situation to apply MTF. Leveraging with futures. Now here we will use daily charts. The condition is again same. On monthly chart, the dashed line should be below the main line. It tells us that the trend is up of monthly chart. So larger trend, that is monthly charts trend is up, and we are trying to trade in the direction of larger trend. This MACD tells us that larger trend is up. So here the first crossover happens, that is I think mid of 2022, and this line is the first line when this crossover happened. So it was a time to buy delivery also, and the condition here we require is that price should be below 34 EMA and should be above 200 EMA. Also, the 200 EMA should be above 200 SMA. So here it first comes down to 34 EMA. Thereafter, we require all the conditions are met here. Then thereafter, we require some reversal signal. Some reversal signal. These two bars make a reversal here, and upon this reversal, we can buy. In next session, I'll be taking the 1 bar, 2 bar reversal signals also. So that will help in identifying the reversals during such conditions. The condition here is the price should be below 34 and it should be above 200. 200 EMA should be above 200 SMA. And in such, if these three conditions are met, then one should look for a reversal. Here is one reversal. Here is another reversal. Then here you can see if this chart would have been in candlestick, then this would be engulfing, bullish engulfing. This. So this is one reversal. This is one reversal. This is one reversal. Now upon this reversal, we could not get much. Probably our stop was also taken out. So I have already informed that in almost 10 trades, 2 or 3 will get stopped, 2 or 3 or 4 may be mediocre, but the 2, 3, 4, which rest of the 3, 4, they can work perfectly, and they work so perfectly that it takes out the losses of stops also and the Medicare also. So after this, you can see the rise. So this is leveraging with futures. Here you can see that the pullbacks were not very much, not very big, and small pullbacks, holding future. I think it will not matter much. Any questions till now? Generally, you would have seen that if you can recollect, many would have traded futures, and now they'll recollect that those were the times of accumulation, and therefore large ups and downs were happening, and future holding was becoming difficult. So whenever futures holdings becomes difficult, it can be said that, or it can be it can be interpreted that it is an accumulation or trending phase. Futures will generally work better during acceleration phase. MTF will generally work better during trending phase, and equity entry will work better during accumulation phase. During slowdown phase, there should be no entry, only holding the stocks which you are holding. no new entry during the slowdown period, and from distribution, the downtrend starts. Now, here I should mention one more thing. The election results are due on 4th or 5th, I think so. So, such events, they can work in the favor of trend or work against the trend also. If you, I'll give one example. The rockets that we fire for going to space, there are two or three different engines fitted in it. One engine generally lifts it from the Earth's surface and crosses it over the environment. After crossing over the environment, uh, the another engine is fired to take it to its destination. So those are known as boosters. Even if there you see a distribution on the chart, but due to some event, such boosters may work and the uptrend may resume again. So, thinking that since there is a distribution, therefore the downtrend will start, one has to uh, risk management is paramount here, because things can change within a few days. The booster may come out at any point of time. Those who are trading since long, you may remember that once when RBI governor came in the morning and decreased the interest rates, markets were probably falling at that time. Many were having short positions, and there was no indication on charts that the market is going to turn. But in the morning before 9 a.m., governor of RBI came and uh, informed that or declared that he is reducing the interest rate, and that day market moved up like anything. So such boosters may deteriorate the trend or strengthen the trend. So one has to use risk management mechanism trading with trade. With this, any questions? With this, we will be completing this session. In next session, we'll talk about the reversal patterns, bar patterns, one reversal bar pattern, two reversal bar pattern. In the first session, we have already taken candlestick reversal bar pattern, candlestick reversals. We'll be revisiting them. Next sessions will be about reversal patterns. I hope you all have enjoyed all. Thank you very much.
Thank you, Mr. Nitin, for this wonderful session. As we conclude, let's apply this understanding to make more informed financial decisions. To all the attendees, thank you so much for joining us today. Let's continue this journey together by staying informed, inspired, and empowered. Keep an eye out on our next informative webinar. Until then, stay connected with us for more updates. Thank you.